Well, I'm still hunkered down. Still don't like the way this market's acting. Still feel there's some weakness here. Not looking for a crash, but am looking for a correction. Hey everybody, Courtney Smith here. Glad to have you here for our Monday, July the 3rd, almost Independence Day, weekly video newsletter, TradeSmith. Now this, I think probably the founding fathers wrote this. I have a feeling George Washington had a hand in it and John Hancock signed it. Let's take a look at the markets. I still don't like that purple predictor. Look at the market. I've told you we're going to suffer here a little bit. Not big time, maybe 5%, maybe probably more than 2, less than 8. Don't think we're going to get a full-fledged correction, which would be 10%. But the market's drifting lower. The underpinnings are crumbling a little bit. Not enough for a crash, probably not even enough for a correction, but enough for a mini correction. Purple predictor still leading to the downside. Now, Dow Jones, look at the green line up there. I've got the red arrow pointing at the green line. It just crossed over to below the red line, which means that there's more downward price pressure than upward price pressure, and that's why the Dow is moving lower. Now the NASDAQ, it peaked before the other two big indices, but it also is looking weak. But here, I'm looking for it to stay a little bit stronger than the other two. Look at the purple predictor is above the price action and therefore gives me a little bit of confidence that this can actually last or do a little bit better. I'm not saying it's going to do well. I'm not saying it's going to go up. I'm saying it'll go down less. Over here, seasonality remains bullish, but notice here too, the purple predictor actually dipped below the price. So it's starting to show some weakness, a little teeny bit of weakness as well. But nonetheless, unless we get down below 132.5, which is a long way away, I'm going to stay on a bull signal, even though we're past what is normally the seasonal high. Well, when is the seasonal high? Well, it's supposed to be in May. We're supposed to sell in May and go away. You can see here that the seasonality drifts lower through June into early July, no matter what scenario we're going to look at. Now, once again, I prefer the blue line. And the reason is because it's all post-election years, of which that means that there's a very large database of those years. Some of the other possible scenarios is the first elected. That would be the red line, not as bullish. But that would be a possibility. And then, of course, we're not going to ever use the green line because Hillary was not elected. Then the black line, a Republican first elected, would be the most bearish scenario. But right now, so far, the market's making, has been making higher highs. So at this point, I'm taking the blue line because it fits the more bullish price behavior we've had so far this year. And at the same time, it has the most data, and therefore I feel more comfortable with it. But still, we have to recognize that the other two potential scenarios are more bearish than the preferred scenario. So we have to keep one eye on that. The yield curve, which had been collapsing a year ago, is now going to go into a period where instead of capping profits, it's actually going to start to help us out. Not a lot, but you can see that starting in September, and in particular in November, the yield curve expands up, and that's going to become a bullish pressure on the market for the fourth quarter of this year. So I'm really looking for a great fourth quarter this year. Asset allocation. This one's just, you know what? It's telling us nothing. It's not going up. It's not going down. Who cares? Stock market risk indicator. Now, what this is telling us is actually that they're starting to say that the economy is going to perk up. And furthermore, this is saying this is one of the few bullish factors out there right now, or something that turned bullish, because what it's saying is that the economy is going to do well. Consumer discretionary type stocks are going to do better than staples and utilities. And so as a result, this is an indication that the stock market it wants to take on more risk, and therefore it's getting friskier. We might want to call this a stock market frisk indicator. So global shares, sluggish. So I don't really want to do anything here, but if anything, I'd want to be bullish. But the place, EEM, a little bit more bullish. I'd still rather be here. Purple predictor is leading to the upside, so I'd rather be long here. I really don't have a position in this in the real world, but this is where I'd rather be. But of course, you know where I really want to be, where I've been pounding the table for you, and that's in the Greek stock market. Let's get that picture up here. Come on, baby. Why? There we go. That's been the place to be. You can see it's about the best bull market in the world right now. And people are saying to me, Courtney, why in the world did you pick this bankrupt, useless little country as your place to invest the most? And really, there's two large reasons why I focused on the Greek stock market. Number one, all the bad news was out, telling us that they were going to default or that they were in deep economic trouble. Who didn't know that? So everybody who wanted to sell has sold. Second thing, I'm a big believer in the yield curve. And the yield curve in Greece is more positive than just about any country on the face of the earth. And that tells me that the economy is going to do well and the stock market's going to do well. So keep an eye out here. This is still where I want to be long in the world. Treasury notes crack down. Now, notice that we're in a situation where both the bonds and the stock market are going down. So that's not a particularly pretty picture. That's a picture that makes me nervous. Higher interest rates, which that means lower bond prices, I think are starting to weigh on the stock market. Purple predictor is still a bit supportive here, but as you can see, we gap down over that sharp uptrend line, and sharp uptrend lines get broken all the time, so that's no big deal. But the lower uptrend line would be a big deal if we broke that. But it looks to me that's about where we're going to go. So we're going to go down to at least 124, maybe as low as 123 here on the bonds. That means higher long-term interest rates. Now, if long-term interest, now why? So let's take a look. The green line shows interest rates, and you can see the pop up there that we had this week. Right underneath that is that gold line that shows the price of gold actually went down. So gold was saying we should have lower interest rates. But look at the next two lines. The blue line shot up sharply. Those are German 10-year Treasury yields. And I think that was the biggest reason why U.S. yields popped up. But also notice that even the CRB down at the bottom, it actually had a little teeny pop. And that also, I think, spooked the market, thinking that inflation is going to come back. The dollar cracked down. I mean, it really cracked down. In spite of the higher interest rates, which have not been supportive of the dollar, the stronger economy in Europe was a big leader of why we looked at it. Draghi came out and basically said that he was going to be keeping, well, let's put it this way. The headline said one thing and what he said was another. But the market believed that what he was saying is that they're going to tighten monetary policy over there, and that's going to lead to a stronger euro. And that certainly has been the case, and it's been a significant bear market on the dollar. Well, if it's a bear market on the dollar, then it should be a bull market on gold, but gold did not go up. I'm getting more and more bearish on the gold market because in the face of good news, it's not going up. And if a market doesn't go up in the face of good news, that means it's a pretty bearish situation. So I'm looking for it to break that uptrend line, go down to say 12.15 minimum in the next 2 weeks. Our indicators are mixed. One bullish, one bearish, one sideways. So we may just drift sideways for a while. We'll just have to see. Oil, this did exactly what I told you it would do. We got down to almost 42. I put a square purple box there. I'm looking for the market to rally up into that box and then fail and start to go down. So look at that target box as a great place to be selling oil. All right, thanks very much, everybody. Love having you here. Of course, we'd love to have you as a fully paid up member. You know the routine. I don't need to go into it. Less than a Starbucks of coffee every day, but you get incredible value. We've crushed it in the market, made tons of money. In fact, it's kind of embarrassing how much money we've made. All right, that's it for me. Freebies, fully paid up members, hang in there for just a second. Hey, Courtney Smith here, and I want to tell you about TradeSmith, our video weekly newsletter. Yeah, I've been bringing the hammer to the market for over 45 years, and now I share that expertise with you every week in a terse, to the point video newsletter. Now, see, back in the old days, I actually ran the #1 stock newsletter in the United States for 5 years, according to the Hulbert Financial Digest. I crushed the market. I went where the action was, and for 5 years, when I did this newsletter, it was the #1 rated most profitable newsletter there was. There's a picture of it. In addition, I also ran the #1 mutual fund, growth mutual fund in the United States. There it is. There it is. There's Morningstar. Look at that chart. Ooh, that's a beautiful looking chart there. And I was #1. Well, and no losing year in 40 years. I've been doing this for a long time, and I want to share that expertise with you so that you don't have to go through 40 years of experience. Trust me, I bled a lot in those 40 years, but what that means is I've led a lot, and I've shown tens of thousands of people how to make money in my career. Now, first of all, in this newsletter, we're going to cover the key markets. We're going to talk about the U.S. stock market. We're going to talk about global stock markets. We're going to talk about foreign exchange. We're going to talk about futures, yeah, even commodities, oil. We're going to talk about bonds so that this is a one-stop shop. You can come here. You don't need anything else. We're going to use options. Whenever we have the opportunity to leverage up and turbocharge our profits, we're going to do it. Now, this is totally unique analysis. You think that if I did what everybody else did, I would have those #1 track records? Of course not. What I have to do is unique. That's the only way you can beat the competition out there year after year after year. So, deep fundamental analysis. I'm going to talk about this on 2 levels. First of all, fundamental analysis of the markets, monetary policy, economic policy, trade flows, all of those sorts of things, but on a very, very deep level. I've studied macroeconomics for decades now, and I've been using that analysis for decades. In addition, we look at deep fundamentals of individual stocks when we look at our stock market trades. That is to say, we're going to tear apart these companies. I focus a lot on a few key metrics. One of them, strong earnings growth. In the final analysis, that's the thing that really drives stock prices. Another factor that drives stock prices is when earnings per share estimates are going up. That is to say, when a broker changes their estimate from 10 cents a share to 20 cents a share, they call their clients buy the stock, and the price goes up. So those are the 2 most powerful techniques that affect the price of a stock. And I'm going to tear that apart and show you why I love these companies. But at the same time, just because it's a great company doesn't mean it's a great stock. We need to be able to time these things and buy them when it's good to buy and sell them when it's good to sell. So I'm going to show you unique technical analysis you can't get anyplace else. It's a combination of a number of indicators. Some of them you might have seen elsewhere, but I use them in a unique way. Others, you've never seen them anyplace else. I'm the inventor of those techniques. But you know what? Even the techniques that I use of other people, I use from people who are friends of mine. Yes, I've been around this market so long that most of the greatest technicians in history have been friends of mine. In addition, I'm going to show you ninja trading tactics. How are we going to get the best fill? How do we enter the orders? Are we going to use stop orders, or are we going to use limit orders or market orders? All of those sorts of things I'm going to give you in our weekly video newsletter. Key benefits of the newsletter. #1, killer analysis that you're not going to find anyplace else. This is unique. This is unusual. And I have to make it unique. I have to make it unusual because that's the only way I can be #1. By the way, I was voted #1 bond and gold market timer for 3 years in a row by Timers Digest. You can only do that when you have unique and killer analysis. Killer trades, because once we've got the analysis, we need to make money from it. We need to turn it into an actionable item, something that we can actually do in the real world. So I'm going to give you killer trades. I'm going to tell you specifically where to buy, specifically where to sell. Nothing is left to the imagination. I'm precise. It's also to the point. I don't want to waste time. I don't want to waste your time. I don't want to waste my time. So no BS, no stories, no jokes, no nothing. Right to the point. Here's what to do. Here's why to do it. And here's how to make money from it. So I'm going to keep it terse. It's about 20 minutes per week. Right to the point with all the analysis. I show you the charts right on the screen so you know exactly why I'm doing it. You can double check my work. If I show you an indicator and I say this is what it means, I'll show you the recent past and you can see if it worked recently. Of course, it does. Now, actionable, that's a key thing. So many analysts out there, it's blah, 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 blah. It seems to me that all they want to do is they love the sound of their own voice. They want to sound smart. You know what? I don't care if I sound smart. That's not the point of the exercise. I'm not here to try to impress you. I'm here to help you make money. I'm doing all the same trades that I recommend to you. So trust me, they better be profitable. Easy. Like I say, I'm going to give you the exact entry, exit points. It's going to be super easy. Just type them into your brokerage platform, and there you go. It can't be any easier than that unless I came over to your house and typed in the orders myself. It's only $47 a month. This is a peanut for what you're getting. This is killer analysis, killer trades. This is something where, you got to stop and think of it this way. Can I make $47 more per month if I subscribe to this newsletter, or am I not going to make $47 per month? You know the answer. The answer is, of course, you're going to make at least 47, probably 10 times that, probably 100 times that, probably 1,000 times more than the $47, depending on the size of your account and if you follow all of my trades. So also, I want you to have a lot of free bonuses right up front. As soon as you sign up for the first month, I'm going to give you thousands of dollars of free bonuses. A lot of them are options related because I'm an owner of a company called Options University, and we've got some great education there, from option beginner to pro in just 4 nights. I like using options if I can because they can turbocharge the profitability. They can also be used to cut risk at the same time. That's a pretty awesome combination. So I'm going to give you from options beginner to pro in just 4 nights. Great introductory course for an option beginner. I'm going to give you how to quickly and easily master the top 20 technical indicators, some of which I use, but of course, as I say, I often use them in tricky new ways, and I'll show those to you as well. Retire rich with 10x income. I love this course. Really, isn't that what we all want, is to retire rich? And hey, why retire rich? How about retire rich and early with 10x income? This is an awesome course. You're going to love this course. It's going to get you focused so that you can retire rich. The secret is out with gamma trading. Now, this one's more advanced. I'm not kidding you with this. Gamma trading, I used to be an options market maker in the institutional world. I didn't deal with retail customers, only with banks. And what did we do? We did gamma trading all day long. It's something that's so super sophisticated that very few retail investors ever really understand it. This course gives you the insight into how to do this sophisticated technique. So we started from option beginner at our top bonus. This one, advanced and very super cool. Another one is, I love this. Come on. We're going to give you a new option strategy every month. So what's going to happen is you're going to receive a new option strategy every single month for 12 months, give you a month to master the strategy for the month, and then learn a new one, and then learn a new one. This is a great concept so that you can learn in a relaxed fashion. Gotta love it. I'm also going to give you 82-page manual on candlestick secrets. This is a particular style of trading, using, instead of bar charts, using candlesticks. What's cool is it's got flashcards. It's really very cool because you actually get to learn just like you did when you were a kid. So it makes it super easy. You can be studying while you're sitting there on the subway or whatever, looking through those flashcards, the tutorials, the manual. It's awesome. And then finally, a very secretive part of the universe, foreign exchange options trading, where we combine foreign exchange trading with options trading. profiting from the two hottest markets. So I'm giving you 7 bonuses here. The value, if you were to go and buy those, go to optionsuniversity.com. Check them out. You'll see the price is just under $2,200. So when you sign up for just $47 a month, I'm going to give you these 7 bonuses right away. You're going to be able to access them right away. So let's repeat. You get the weekly video briefing with actionable advice. You get the 7 valuable bonuses, and all for just $1.56 a day. Come on. Really? You don't think it's worth less than $1.56 a day? Come on, man. You can't get a Starbucks coffee for $1.56, but you can get one of the best video newsletters ever. In fact, I believe it's the first video newsletter ever. But you're getting the same insights and the same techniques that I use to build that incredible track record of being the highest performing, most profitable newsletter for 5 straight years. All for $1.56 a day. This is a peanut. So what do you got to do? It's simple. You go to bit.ly/weekly market forecast. And yes, the W and the M and the F have to be capitalized. But go to bit.ly/weekly market forecast right now to subscribe. Get involved. Full money back guarantee, of course. Do it right now. You're going to really enjoy it. I'm not allowed to promise you that you'll make money. The SEC, the FTC, they'll come down on me like a ton of bricks. But I know what my track record is. I think as long as you follow the advice, I think you're going to be very happy. I'm allowed to say you're going to be happy. I'm not allowed to say you'll make money or they'll come down on me like a ton of bricks. We don't like that. So here's what I need you to do. Go to bit.ly/weekly market forecast with the capital W, M, and F right now. Go there right now, check it out, sign out, full money back guarantee, get all the bonuses, try it for a month. I know you're going to love it. Thanks very much, and I'll see you on TradeSmith. Thanks very much. Bye-bye.